हेलो एवरीवन, वेलकम टू माय चैनल HD ओरायन। हम पढ़ रहे हैं अकाउंटेंसी फॉर CBSE क्लास 12th फ्रॉम S Grewal's टेक्स्ट बुक 2023-24 एडिशन। To start with chapter 1, accounting for partnership firms fundamentals, we need to remember these 7 points before we proceed in the exercise. Let us revise this. Provisions affecting accounting treatment in absence of a partnership deed. First is that equal profit sharing ratio to partners. Second, no salary to partners. Third, no commission to partners. Fourth, no interest on capital to partners. Fifth, no interest on drawings charged from partners. Sixth, 6% per annum interest will be paid on loan provided by partner to the firm. And seventh is interest on capital only out of profit. So these are the 7 points one should remember to understand the fundamentals of partnership firm. Now let us proceed to the exercise. In the exercise, the first few questions are related to partnership deed. It means if there is no partnership deed, then the provisions of Partnership Act 1932 will be automatically applicable in every question. So the 7 points which we discussed just now, that the application part of that we will see in these questions. Question number 1, in absence of partnership deed, state the provisions of the Partnership Act 1932 relating to A is salary of partners. So when there is no partnership deed, then the firm will not pay any salary to the partner for participating or not participating in the business. Fine. So salaries to partners will not be paid because there is no partnership deed. B, interest on partners' capitals. Means whatever capital the partner has invested in the firm, they expect interest on it. But if there is no partnership deed or if there is no clause related to interest on capital, then no interest on partner's capital will be paid. C, interest on loan by a partner. When a partner has provided loan to the firm, in that case, the Partnership Act 1932 says that 6% per annum interest be paid to the partner. Point D, division of profit. Division of profit, if there is no special profit sharing ratio given in the partnership deed or there is no partnership deed, in that case the profit will be divided among partners equally. So 1:1:1 or like that to all the partners. Then point E, interest on partners' drawings. So drawings are the amount withdrawn by the partners for their personal use from the business, and in absence of partnership deed, no interest on drawings will be charged from the partners. Point F, interest on loan given to partners. Now this is a case reverse of point C. Here a partner has given loan to the firm, but in point F we see that a loan has been given by the firm to the partner. So if there is no partnership deed, then no interest will be charged from the partners. If required interest on loan, then there has to be a partnership deed stating the same. Now let us discuss question number 2. Mahesh, Ramesh and Suresh are partners in a firm. They do not have a partnership deed. At the end of the first year of the business, they faced the following problems. Now, after the finish of the first year, there is a discussion among the partners related to distribution of profit. So the conditions here are: point A, Mahesh wants that interest on capital should be allowed to the partners, but Ramesh and Suresh do not agree. Now, one of the partner is expecting interest on capital, but the remaining two partners are refusing to accept it. So, and there is no partnership deed also. So as per Partnership Act 1932, no interest on capital will be granted to the partners. Now, point B, Ramesh wants that the partners should be allowed to draw salary, but Mahesh and Suresh do not agree. So, in absence of a partnership deed, there is no provision of salary to the partners as per Partnership Act 1932. So, no salary will be given to the partners. Then point C, Mahesh and Ramesh want that Suresh should pay interest on loan given to him by the firm, but Suresh does not agree. So here is a point related to point F here in the previous question. Here also, the firm has granted loan to one of the partners, and now two of the partners are asking Suresh to pay interest on loan, and there is no partnership deed. So no interest on loan will be charged by the firm from the partner. Then Mahesh and Ramesh, having contributed larger amounts of capital, desire that the profits should be distributed in the ratio of their capital contribution, but Suresh does not agree. Now, regarding profit distribution, if there is no partnership deed, then the Partnership Act 1932 suggests that irrespective of their capital contribution and efforts for the management of the business, the profit will be distributed equally among the partners because the status of all the partners is equal in a firm. But here one should understand that there is difference in opinion among the partners. Means some partners are expecting something and the rest of the partners are against it. So in this case, whenever we have to decide something, the majority we have to see. Fine. If all the partners are agreeing at a point, then it can be granted. Fine. But if majority of people are against that point, then whatever is the opinion of the majority of partners, that will actually hold true. So this is true related to other decisions to be taken by the partners. But as far as distribution of profit is concerned, we have to stick to the provisions prescribed in Partnership Act 1932 as we have discussed in question number 2. Now let us see question number 3. Following differences have arisen among P, Q and R. Those are the partners. State who is correct in each case. Point A. P used rupees 50,000 belonging to the firm and earned a profit of rupees 5,000. Q and R want the amount to be given to the firm. Now here 50,000 is the firm's property which one of the partner has used and has earned a profit of rupees 5,000. Now because the money belongs to the firm and therefore the profit also belongs to the firm, and what Q and R are expecting, that is true. So P must pay not only 50,000 rupees back to the firm but also the profit which he has earned from this 50,000 because P has used the reputation and resources of the firm to earn this profit. So this profit also belongs to the firm. Now, point B. Q used rupees 10,000 belonging to the firm and incurred a loss of rupees 1,000. He wants the firm to bear the loss. Here, rupees 10,000 is firm's property which has been used by Q and he incurred loss. So, the loss will be for Q only. Loss will not be borne by the firm. But the 10,000 rupees which Q has taken, he has to give this money back to the firm. So entire 10,000 firm will receive back from Q, but rupees 1,000 loss which Q has incurred will belong to Q. Here in point A, because it was profit and therefore profit goes to the firm. But in point B, 1,000 rupees loss will go to the individual partner. Here see, P used rupees 50,000 and in B also Q used rupees 10,000. Now they are personally using the firm's property. It is not that the firm has invested or firm has tried to make this profit or loss. Rather, the partners are personally using the firm's property to make profit. So in this case, loss will go to the individual partner, but profit in case will go to the firm. Let us see point C. P and Q want to purchase goods from Star Limited. R does not agree. Now it is an economic decision to be taken. They want to purchase goods for the firm, and here there are three partners and two of them are agreeing to purchase goods from Star Limited. But one of the partner does not agree. So here they can purchase goods from Star Limited because majority of the partners are in favor of this. Fine. So if you reverse the case, if R is agreeing and Q and R are disagreeing, then in that case they cannot purchase from Star Limited because majority are refusing to purchase from R Limited. But in this case, majority of the partners are agreeing to purchase from Star Limited, and as a result they can purchase goods from Star Limited. Point D. Q and R want to admit W as a partner. P does not agree. Now this is a question related to admission of a partner, and in Partnership Act 1932 it is mentioned that all the partners must agree to admission of a partner. If a new partner is to be admitted, then 100% consent from all the partners should be obtained. But here we see one of the partner is refusing. Here we cannot stick to majority of the partners are agreeing and therefore we will admit W. That is not the case. All the partners must agree to it, and then only a new partner can be admitted. Therefore, W cannot be admitted because one of the partner has disagreed to admit admit W in the firm. Point E. R had given loan of rupees 2 lakh to the firm and demands interest at the rate of 10% per annum. P and Q do not want to pay the interest. Now, regarding this also, in Partnership Act 1932, in absence of a partnership deed, it is stated that in such type of loan, when a partner has granted a loan to the firm, in that case, only 6% per annum interest must be paid to the partner. Fine. So here in this case, what is written here is that P and Q do not want to pay interest is wrong. They have to pay interest, but the interest rate has to be 6%, not 10%. Although one of the partner are on his loan, he is expecting or he is asking 10% interest on it, which P and Q can refuse and grant him only 6% per annum interest on loan. Now let us see question number 4. Barun, Tarun and Shivam are partners in a firm and do not have a partnership deed. Barun introduced further capital of rupees 5 lakh on 1st October 2022, whereas Shivam took a loan of rupees 50,000 from the firm on 1st October 2022. Disputes have arisen among them on the following. Now after the after the finish of the year, now they are having different opinions about distribution of profit, and there is no partnership deed for them. Now we have to decide in the light of Partnership Act, Indian Partnership Act 1932. And the case A is Barun demands interest at the rate of 10% per annum on rupees 5 lakh being his extra capital. So interest on capital in case of no partnership deed is not recommended in Indian Partnership Act 1932. Fine. So no interest on capital will be allowed to partner Barun. Point B. Tarun desires that his son Deep should be admitted as a partner and he will give him half of his share. Barun and Shivam do not agree. Now regarding admission of a partner also, the Partnership Act 1932 states that all the partners have to agree on admission of a new partner, then only a new partner can be admitted in the firm. In this case, Tarun is willing to admit his son Deep, but rest of the partners do not agree. So Deep cannot be admitted in the firm. Point C. Varun and Tarun are of the view that Shivam should be charged interest on loan from the firm at the lending rate of the banks, which is 12% per annum. Now, what type of loan it is? You can see here, Shivam took a loan of rupees 50,000 from the firm. Means firm has given a loan to one of the partners, Shivam, and Varun and Tarun are willing to charge interest on such loan at the rate of 12% per annum, and there is no partnership deed. So no interest will be charged from partner Shivam on his 50,000 rupees loan which he has taken from the firm. So no interest will be charged from Shivam. Point D. Tarun has withdrawn rupees 50,000 from the firm for his personal use. Varun and Shivam are of the view that Tarun should be charged interest at the rate of 10% per annum. Now, Tarun has withdrawn rupees 50,000. It means it is a drawings. Fine. He has withdrawn rupees 50,000 for his personal use, one of the partner. And Partnership Act 1932 says that no interest on drawings will be charged from partners. And in this case, we do not have a partnership deed. So as a result, Tarun need not to pay any interest on his drawings. Now let us see question number 5. Harshad and Dhiman are in partnership since 1st April 2022. No partnership agreement was made. They contributed rupees 4 lakh and rupees 1 lakh respectively as capitals. In addition, Harshad has given loan of rupees 1 lakh to the firm on 1st October 2022. Due to long illness, Harshad could not participate in business activities from 1st August 2022 to 30th September 2022. Profit for the year ended 31st March 2023 was rupees 1,80,000. Dispute has arisen between Harshad and Dhiman. Now, generally such challenges are there in partnership business. If there is no partnership deed, after we get the profit, then the desires and the opinions of the partners regarding distribution of profit differ. Fine. So this is one of the major challenges of a partnership firm. Now, after they have earned a profit of rupees 1,80,000, both the partners are claiming different things. Harshad claims he should be given interest at the rate of 10% per annum on capital and loan. Fine. So here Harshad has got capital also and loan, as it is stated here in the question. Harshad has given a loan of rupees 1 lakh to the firm in the middle of the year, that is 1st October 2022. So in this case, Harshad cannot be granted interest on capital because there is no partnership deed, and Indian Partnership Act 1932 suggests that no interest will be given to the partners on capital. So on capital, no interest will be given to Harshad, not even 1%. But the loan which Harshad has provided to the firm, on this loan amount, 6% per annum interest will be paid by the firm to the partner Harshad. Then Harshad's second claim is profit should be distributed in the ratio of capital. This is again, this cannot be accepted because there is no partnership deed, and Indian Partnership Act 1932 says that profit distribution will be equal irrespective of their capital contribution and time and effort given for the firm. So here also Harshad will get equal distribution and profit cannot be distributed in capital ratio. Then Dhiman has, the first claim is profit should be distributed equally. So it goes with the Indian Partnership Act 1932. So Dhiman's proposal has to be accepted. Second, he should be allowed rupees 2,000 per annum as remuneration for the period he managed the business in absence of Harshad. Now this this remuneration cannot be accepted because there is no partnership deed, and Indian Partnership Act says that no salary will be given to the partners. So this claim will not be accepted. And third is interest on capital and loan should be allowed at the rate of 6% per annum. Dhiman says that on whatever capital they have invested, they should get interest on capital at the rate of 6% and on loan also 6%. So because there is no partnership deed and therefore interest on capital cannot be allowed. So no interest on capital will be given to the partners, but on loan 6% interest per annum can be allowed, has to be allowed. Fine. And what type of loan it is? It is the loan which a partner has provided to the firm. On such type of loan only 6% interest is allowed as per Indian Partnership Act 1932. So this way the dispute has to be settled and both the partners have to agree on it. So these questions were very easy and it was just a revision of the things which is there in Indian Partnership Act 1932, and it has to be there with every question in your latent mind, means you have to use this information in all the questions. Fine. I hope that you have understood the concept well and you have liked the video. So please do like, subscribe and share this channel. Thank you so much for watching this video.